And with that, we're going to go to Clackamas County Assessor Tammy Little for opening comments. Tammy?
Thank you, Scott. Good afternoon, everyone. I'm Tammy Little, Clackamas County Assessor, and I'd like to welcome you to our first ever virtual town hall and to thank you for attending. Every fall for the past 3 decades, your assessor's office has hosted 8 to 10 community town halls around Clackamas County to help taxpayers understand Oregon's complex property tax system and also to individually answer taxpayer questions. While we missed the opportunity to meet with you in person this year, we are happy to still be able to present information and have our staff standing by to answer your questions. I want to thank our public and government affairs staff for making this webinar possible and facilitating it. And it's also my privilege to introduce some of our great staff joining us today, including our appraisal manager, Lynn Longfellow, sales data analysts, Brandy Peters and Matt Healy, plus our resident farm and forest land expert, Tony Hunter. In addition, we have several team experts ready to respond to your questions. And it's also my pleasure to introduce the Clackamas County Deputy Assessor, Bronson Rueda, who will be giving us our presentation today. Thank you.
Great, thank you, Tammy. Next, we'll have our presentation from Bronson. Bronson?
Okay, thank you, Scott, and thank you, Tammy. Welcome everyone to the first virtual Assessors Town Hall. I'm happy to be part of this event, and my name is Bronson Rueda, and I'm the Deputy Assessor and have been with the Assessment and Taxation Department for nearly 2 years. Prior to my time at Clackamas County, I spent 8 years at the Oregon Department of Revenue in the Property Tax Division, where I held various positions. The last one was the Valuation Section Manager, and in that role, I managed about 35 appraisers and 3 subordinate managers. Prior to my time at the Oregon Department of Revenue, I spent 9 years as a commercial fee appraiser. The last 5 of those, I managed a team of appraisers that focused on office and medical office valuations in Oregon, mostly for financing purposes. Now, about today's presentation. As Tammy stated previously, one of the goals today is to help residents gain a better understanding of our property tax system. I will also give a broad overview of our real estate market and property taxes. Again, if you have questions throughout the presentation, please ask at any time by raising your virtual hand or using the chat function. We'll also have time at the end for questions. Okay, for this next slide, I want everyone to remember back in school when the teacher would cue up a movie for the class to watch. Well, some kids loved watching videos during the class and some did not. Hopefully, you folks loved watching videos in class because this next slide features a short video, 4 to 5 minutes, giving an overview of Oregon's property tax system. So sit back and relax, and let's give the video a view.
Bronson, we can't see your screen. I don't believe you're sharing your screen.
Scott, is my screen showing? It's showing on my end.
No, it doesn't look like it. Let me see if I can bring this up. I believe this is the video you're talking about.
I think we're having technical difficulties. I can't hear this. Can anyone else hear it?
No, we are having technical difficulties. Scott, I wonder if you could allow Bronson to share his screen.
Yeah, let me try this again. I unshared and let me try to share it again, see if I can get this to pop up.
Bronson, you have co-host abilities. Oh, there you go.
Can you see that now?
We can
Yes.
see that.
Okay, let's try this again. to the video, and thank you. Somebody from the chat room said we couldn't hear or see the video, so thank you for those comments. Let's try this again. Round two.
Still no sound.
So Tammy said there's no sound. Is anyone else hearing sound on this? Scott, is there a fix to this?
I don't believe so. I don't know why it's not, why we can't hear it. So you might just have to move on, and maybe we can listen to it or view it later.
Okay, we'll go ahead and move on. That's okay. We saved 3 minutes there, perhaps. But if you go on YouTube and YouTube Oregon property tax videos, you'll be able to see this video, and there's also 4 others that you can watch. I think they're interesting and informative, and I recommend them. So I don't know if at some point, Tammy or Scott, you can put a link up in the chat box to where those videos are on YouTube.
Yes, I will. I'll do that right now.
We can also link them on our website.
Mm-hmm.
Okay. Then let's move on. All right, before getting into the meat of this slide, there are 2 important snippets that you need to remember. One, the assessment date for the values and property tax on your current tax statement is January 1st, 2020. What that means is the market information used to value your property on your current tax statement is from 2019. This is important to remember as we move forward. Number 2, there will be numerous slides in this presentation that have a lot of data. In most of the slides with data, I will point out highlights and not cover the slide in its entirety. So please ask questions if there is something I don't cover that you're curious to learn more about. Now on this slide, in 2019, we did have value growth, but not at the rate in previous years. Later in this presentation, you will see data that displays this. The paragraph on the right, I'm going to highlight it. Scott and others, can you see when I move my mouse around to highlight things?
Yes.
Okay, good. The paragraph on the right of the slide shows a few stats of the growth we had in Clackamas County. 35 new subdivisions, 1,300 new homes built, and 1.4 billion in additional real market value. Okay, here are some 2019 statistics from RMLS. And RMLS stands for Realtor Multiple Listing Service. It's a website that realtors use to list properties and gain market data. So this is of the Portland metro housing market. The next slide, we will drill down to Clackamas County stats, but here we will focus on the Portland metro area at a high level. You can see sales of residential properties continue to be strong and sale prices continue to rise. The average sale price was up 1.5% and the median sale price was up 2.5%. All the indicators on this page point to a good real estate market. Okay, as promised, here is some RMLS data showing the change in market values from 1/1/19 to 1/1/20 for certain Clackamas County neighborhoods. Note that the value changes show how diverse our county is from urban to rural and the difference in market change in those real estate sectors. In this slide, we're looking at changes in value according to our internal sales study to reach market value as of 1/1/20 in Clackamas County. So what that means is our appraisers went out and studied the market, and these were the results. Here are all of the 16 cities in our county, plus the unincorporated Damascus area. Note, I'll highlight it here with my cursor, Johnson City increased 14%. That's well above, any of the other increases in the county. Johnson City is a small city entirely made up of manufactured homes, and that property type went up more than single family residences in 2019, due to their affordability. Scott, I'm just going to interject here. Has there been any feedback yet if I'm going too fast or too slow?
No, haven't heard anything. Nobody's mentioned anything in the comments.
Okay, let's keep going. All right, I think this is a great slide here. This is a timeline of some of the events for the Assessment and Taxation Department. It represents both a calendar year and how we operate on a fiscal year. Note that January 1st of any given year is our assessment date, and we, right here, January 1st, any given year, and we don't mail tax statements until October, over here, mailing tax statements. And then the first property tax payment is due by November 15th. You know, that's nearly a year after the assessment date of January 1st. So let's take a step back and examine the assessment date, and let's talk about the time period to collect market data for the assessment date. It's important to make the connection that the market period of your recent tax statements is from 2019. So let's start from now and work backwards. Again, your property taxes are due November 15th. In typical years, I'll note this year it's November 16th because the 15th falls on a Sunday. These taxes that you owe are calculated based on the assessed value of your property as of the assessment date of January 1st, 2020, back here, 10.5 months previous. Now going further back from 1/1/20 is the time period of 1/1/19 to 12/31/19. That time frame is the market period that we generally use to collect data and make our values on the assessment date of 1/1/20. Now, I know this is a lot to absorb and can get confusing. So if there's any questions, please jump in. All right, let's move on to some meaty topics here. This next grouping of slides covers property tax law, specifically Measure 5 and Measure 50. We will cover these two measures in detail in later slides, but at a high level, our property tax system is shaped by two initiatives put on the ballots by voters that are now part of our Constitution, our Oregon Constitution. I typically don't read slides, but I think this slide is an exception. So I'm going to go ahead and read the Measure 5 and Measure 50 references here. So Measure 5, passed in 1990, is a tax limitation and sets limits on the amount of taxes that can be collected from each property in both the education and general government categories. Moving on to Measure 50. Measure 50, passed in 1997, is a value limitation and limits maximum assessed value, also known as MAV, growth to 3% annually. Taxes are based on the lower of real market value or maximum assessed value. In addition, permanent tax rates were established for all local districts with existing tax basis and serial levies. So what's the takeaway here? The big takeaway here is that Measure 5 is a tax limitation and Measure 50 is a value limitation. Neither one of these measures places a 3% cap on your tax growth per year. And we'll get deeper into this later on. All right, so what are your taxes based on? It's important to understand two items which are covered in the first two bullets of this slide. One, property in Oregon is not taxed on real market value. Again, RMV. And number two, property taxes in Oregon are based on a calculated Measure 50 assessed value. Now, for those familiar with California's Proposition 13, established in the late 70s, in Oregon, market value does not reset when the property is sold like it is in California. Finally, taxes in Oregon are calculated on the assessed value, which is the lesser. Again, it's the lesser of RMV or MAV. I know there's a lot to keep track of, but here's the bottom line on this slide. Typically, the MAV is equal to the assessed value or AV, which is what taxes are based on. So if MAV can only go up 3% per year, with some exceptions, This creates the predictability of property taxes, which is what Oregon voters were looking for. One more thing to think about. If you're saying to yourself, well, if MAV can only go up 3%, why do my property taxes sometimes go up more than 3% in a year? One answer is new construction or remodeling a property. Another common answer is that voters in any given taxing district can vote in local options or bonds that can increase a property tax bill more than 3%. All right, now let's get into more on Measure 50, how it works. So before I get into what Measure 50 is, I think it's important to understand why we have Measure 50. Prior to Measure 50, taxes were based on the market value of a property. And as you know, market values can fluctuate up or down in any given year. Thus, property taxes fluctuated up and down accordingly, creating a property tax environment that was unpredictable. Well, the voters of Oregon wanted more predictability or consistency in their property taxes, so Measure 50 was born. Okay, so how does Measure 50 work? If you're seeing or hearing this information for the first time, or even the 20th time, this can get very confusing. Due to this, again, I'm going to more or less read this next couple of slides to try to mitigate any confusion. All right, on this slide, bullet 1, when Measure 50 was passed in 1997, maximum assessed value was created, or MAV. MAV equaled 90% of the 1995-96 real market value, or RMV. So this created a tax benefit for all those properties in existence in 1997. Bullet 2, going forward, Measure 50 limits future growth on MAV to 3% per year, with some exceptions. And bullet 3, those exceptions include new construction, remodeling, development of new subdivisions, and rezoning. Bullet 4, Measure 50 established permanent tax rates for all local taxing districts with existing tax basis and serial levies. And then the last bullet on the slide, Measure 50 allowed voters to approve new short-term local option levies to fund additional services or approve bond measures for capital improvements. So remember the acronyms MAV and RMV, maximum assessed value, MAV, real market value, RMV, because I'll use those as we move forward in this presentation. Okay, so you may be looking at your tax statement and your taxes went up more than you expected. So this slide covers examples of how your taxes may go up more than 3% in any given year. Remember, neither Measure 5 or Measure 50 put a limitation on tax growth, just tax limitations and maximum assessed value growth, respectively. I want to emphasize again the point that taxes can go up more than 3%. We get a lot of phone calls on this topic. And this year in particular, some taxes grew more than 3% due to money measures that were voted in. I also want to note, as a side note, that the Oregon Department of Revenue teaches a 3-day class covering this topic. So that kind of proves the complexity in many dimensions into Measure 50. So if you have questions later on, feel free to call our office and talk to me or talk to one of the appraisers, and we can help you better understand this complexity of our Oregon property tax laws. All right, now we're getting into some of the slides that cover stats that I was talking about. This slide covers the value history of just one account in Clackamas County. The time period begins in 1997, the start of Measure 50, and ends with this year's value. You'll notice there's a break in the years right here from 2000 to 2011, simply because there isn't enough room on the page for all the data. But the data does cover the recession years in the early 2010s right here. You can see the dip in market change. So follow my cursor, I'm going up to the cut. The cut refers to the 10% off the 1995 value to establish the first 1997 MAV. And then over the cap, all of these lines cover the cap. The cap refers to the 3% growth cap for MAV with exceptions. Again, I want to emphasize that 3% maximum growth refers to the growth limit in MAV, not a growth limit in tax increases year over year. So what stands out to me on this slide is the market change in red. Follow my cursor down here, market change in red, and the AV change a little bit further down, also in red. Notice the market change has big swings in value, big percentage swings, 4.77%, whoops, 4.77%. And then it dips into the negatives for a couple of years. That's the recession. And then starts turning positive and then goes into some double-digit growth. So if your taxes were based off the real market value, your taxes would fluctuate greatly during that time period. But your taxes aren't based off of real market value, they're taxed off of the assessed value. And down here, follow my cursor, the assessed value, you can see went up 3% every year. This is the predictability that voters wanted for their property taxes. And this is what they're getting. All right, now let's talk about the change property ratio. The acronym is CPR, and I will probably throw that acronym out there. So remember, CPR stands for changed property ratio. All right, so what is it? What's changed property ratio? Well, remember, Measure 50 was enacted back in 1997, and it created a NAV benefit for all property at that time. And remember, the benefit was it reduced the 1997 the 1995 value by 10%, which became the 1997 value. So that was the benefit. But what about property built post 1997? How do they get a MAV and a MAV benefit? Well, for new construction, the assessor's office values the property, which creates the RMV. Then a change property ratio, remember CPR, is applied to the RMV, which creates a MAV for that property, providing a benefit similar to property already in existence. The CPR is a ratio of MAV to RMV for specific property types and is calculated every year. So let's look at a history of CPR. So here's a list and a history of the CPR in Clackamas County since 2012. Up at the top are the different property types that we calculate as CPR for. Take a look at the column labeled 6XS. I'm circling that with my cursor right now. 6XX forest land. The CPR for forest land and then in the 2020-21 tax year is 0.699. This means that any new property built in 2020 will have that ratio, 0.699, applied to the RMV to create a MAV. As you can see, since 2014, the CPR has generally decreased. If you look at these numbers, it generally decreases. 9.3, 8.76 is decreasing. A decrease in CPR happens when property values are rising. If we hit another recession, the CPR will most likely move upward towards 1. Now, let's look at an example here. All right. All right, remember, Measure 50 created a tax benefit for properties in existence in 1997. But for new property, it's fair to give that same benefit. Let's say a property owner builds a new home valued at $502,000. That's the real market value, $502,000. So we need to give this home the Measure 50 benefit and calculate the MAV. So what we do is we apply the residential change property ratio of 0.644 to the MAV. And once you apply that ratio, the math is down here. You come up with your MAV at $323,288. That's your MAV. Lastly, taxes are calculated from the assessed value, and the AV equals the lesser of RMV or MAV. In this example, the MAV, 323 and change, is less than the RMV, which is 502. So the MAV becomes the assessed value. And this creates a Measure 50 tax benefit similar to other properties that are already in existence. Okay, any questions on Measure 50 so far? Like I said, this is a lot of information thrown at you fast and furious, and
We have no questions from the chat, and no one has
Okay.
raised their hand, so we'll keep going.
all right, let's keep going. All right, I've talked about Measure 50, the benefits provided, and the creation of MAV. I give an example of how new construction creates an exception event, providing a MAV for a property. But there are other exception events besides just building a new house. This slide covers those exception events like remodeling and additions, and you can work your way down the list, adding a detached garage, remodeling. So to tie the concept of Measure 50 back to the misconceived perception that property taxes can only go up 3% per year, nearly every Measure 50 exception event will increase MAV more than 3% on a property because you're adding more value than was there before. All right, here's some visuals for everyone out there. There's 5 slides of some examples of Measure 50 exception events. Here is an older house that was razed or torn down and a new house built in its place. This is an example of a Measure 50 exception event. Here we have another house that was torn down and then a new house built in its place. And I think this one is from the East County, and I think it may have had some extra land in a subdivision, or at least more than one house was built on this lot, creating multiple lots. Anyway, let's move on to the next one.
Bronson,
Oh, yeah.
we have a quick question from a.
Sure.
The question is, if you change one aspect of your kitchen, such as reflooring, does that raise your assessed value?
Okay, so remodels, they can trigger a Measure 50 exception event, but it has to go over certain limitations. And Leonard, Tammy, jump in here if I get these numbers wrong, but the numbers are if you add more than $5,000 in value in 1 year, or 10,000 in 1 year, or 25,000 over a 5-year period, then that triggers the Measure 50 exception event. So if you're just replacing flooring and it cost $2,000 and it added $2,000 to your value, then that would not trigger the Measure 50 exception event.
Great, thank you.
Okay. And again, that's $10,000 for any single year and $25,000 over a 5-year rolling period. Okay. Here's a kitchen remodel. This is the before over here, the after. Put in a new island, new backsplash, new tile everywhere, new cabinetry. The next one, another kitchen remodel. I don't know, if you like real estate, these types of photos are really interesting because you can see the before and after, and it just reveals, you know, tastes of the current time, and I just like it. So you can see here the before and after, you know, new countertop in the island, and on the counters here, new cabinetry. This one I think is interesting. I don't know if it's just the way the picture's taken, but you can see on the before there's a window here, but they seem to have taken out the window to put a new cabinetry here. So to me, you know, that's unusual, but maybe they had over here on the left, you can't see, maybe they had another wall of windows where they didn't need this one window here. And having more cabinetry was more important to this kitchen than that extra window. New flooring. And oh, and the ceiling, note the ceiling. They took out this light fixture, replaced it with some recessed lighting and some pendants. Let's go on to the next one. and this is the last one. This is a bathroom remodel. And here you can see they just reconfigured the whole thing. You know, they moved the sink area to the back of the bathroom. They added a sink, new cabinetry, new fixtures. And it's hard to tell, but where my cursor is right now, this is where the pictures change. So you can see to the right of my cursor, this is the new bathroom or the new shower area right here. And the old shower was torn out, was taken away. So this is a good example of a full remodel, new flooring as well. And this definitely triggers a Measure 50 exception event. Okay, so this is a snapshot from our website, and you folks can go on our website and type in your address and see the history of your property, or any address and see the history of that property. So the search engine, again, allows you to put in your account number and shows a 5-year history of your RMV, which is depicted by the red line here, and your MAV, which is depicted by the blue line. Remember, you are taxed on your assessed value, which is the lesser of RMV and MAV. Whoops. So in this example, the AV is calculated off the lesser of these two lines, and the MAV has always been less than the RMV. So the assessed value, which is calculated, which your taxes are calculated from, is predictable and follows a straight line, as opposed to the RMV, which has some variation to value. And this again is an example of what the citizens of Oregon wanted with their property taxes. They wanted predictability instead of variance. Okay, and just an interesting fact I have here written down. Back in 2012, we had about 30,000 properties where the red line here dipped below the blue line. And that was back in the recession. And we have, at that time, we had about 160,000 accounts. Again, just to reiterate, you can go on our website and plug in an address or your account number to see this 5-year history. That's interesting. I recommend you go do that. Okay, now we're going to switch gears to Measure 5. We have been talking about Measure 50, and now we're going to talk about Measure 5. So Measure 5 is also a constitutional limitation, and it limits the amount of taxes that any one taxpayer can pay. The limits are based on real market value and fall into 2 categories: education and general government. The limitation on education is $5 per $1,000 of real market value, and the limitation on general government is $10 per $1,000 of real market value. It is important to note that the tax limitations are applied to real market value, RMV, but the actual tax is calculated from AV. If the actual tax due goes above the Measure 5 limitations for either category, compression is created. Let's look at the next slide as an example. Okay. At the top, there are 2 values. I have my cursor up there for reference. We have real market value at $597,000 and change, and we have the assessed value at $466,000 and change. Both the values, below the values, we have 4 column headers: Measure 5 limit, tax calculation, tax imposed, and tax compression due to Measure 5. So, and the next row is education, which has a limitation of $5 in tax to every 1,000 in RMV. We have done the math here for you, but I want to walk us through the numbers. So the Measure 5 limit on education right here is $2,987.40. This is calculated by dividing 5 by 1,000 and then multiplying the result into the RMV up here, 597,000. That equates to $2,987.40. The next column is the tax calculation over here. The education rate is given, remember on the education line, the education rate is given at the bottom. I'm moving my cursor down. Education down at the bottom, 7.2894 is the rate. You apply that rate to the assessed value and it gives you your tax calculation of $3,399.74. You can see the tax calculation is more than the limitations allow. So the tax imposed is the lesser of these two, which is the Measure 5 limit of $2,987.40. And this tax imposed, since it's below the actual tax calculation, it creates compression, and that amount is $412.33. This is compression. The next row is general government. Using the same methodology as the education row, you can see that the Measure 5 limit is $5,974.79. This is much higher than the actual tax calculation of $2,797.10. So the tax imposed is equal to the tax calculation in this example, and there is no compression on the general government line. The next row is for bonds, and bonds, remember, are voted on by the people and are not subject to Measure 5 limitations.
Okay, we have another quick question.
Sure, yeah.
It goes back to the MAV and remodeling. The question is, in a remodel triggering MAV, do parts of MAV stay the same and the new remodel items get the MAV increase? How does this work?
So that's a good question. And really would want to look at that on a case-by-case basis, because it can get fairly complex as to what the remodel is, what stays the same, and where the MAV is added. So Lynn Longfellow is our appraisal manager. Lynn, if you want to jump in, if you have a different answer, but I think it's going to be that we would want to look at that on a case-by-case basis to determine how MAV is impacted.
Yeah, well, if in fact it is a remodel and is an exception event, your original MAV stays the same. And it's the increase in value, excuse me, attributable to that remodel that is added to the MAV. So if the remodel was $20,000, we apply that change property ratio that Bronson showed you earlier, and I don't know, that wasn't easy math, but 64% of that would be added to your MAV. But the original MAV does not change on a remodel.
Great, thank you.
Okay, let's move on to the next slide. All right, the results from this fall. All right. We have talked about how our tax system works and the market conditions for Clackamas County. Now let's focus on some of the results for the current 2021 tax roll. There was a 5% growth in real market values for the county as of the assessment date of 1/1/20, and most properties assessed value grew by 3%. Now, if you're one of those taxpayers who had a tax increase, greater than 3%, it may be due to what we talked about before, a new money measure passing or a district levied more for bonded debt. Likewise, if you had a tax increase of less than 3% or even a tax decrease, it could be due to taxing districts levied less or paid off some of that debt. Now let's look at the taxing districts that had the greatest amount of tax rate change, either up or down. And here is that list. You can see on the right-hand side, the 2020 change It'll give you either a positive or a negative, whether that district went up and down for this tax year. And if you read this year's property tax press release, this slide will look familiar. It's from the press release. And these are the changes in voter approved money measures that passed for the 2021 tax year. Now take a look at the slide and see if any of these taxing districts on the left here, if any of these taxing districts are in your tax code area on your property tax statement. If they are, it may be an indicator of why your property taxes decreased or increased less or more than you anticipated. Notice there are no new local options that raised more money, just renewals at the same rate. Taxing districts that show an increase, like Canby right here, I live in Canby, in the Canby area, this has an increase. This area had new bonds passed on top of existing bonds, which raised the tax amount. Where there are negative changes, Centennial, Estacada, those districts levied a little less for their bonds. Now, if you have specific questions on what each taxing district uses their money for, you would need to contact that taxing district and find out. Okay, now the previous slide outlined the money measure changes in the county. This slide outlines the result of what your property taxes actually did on a percentage basis, either up or down. So take a look again at this and see where your property lands. Again, I live in the Canby area up here, and you'll note the Canby City 4%, Canby Rural 5%. If you take a quick look at the rest of these percentages, this is at the high end, and 5% is the highest in the county that where taxes went up. Remember, factors that control how much your taxes change from last year include voter approved money measures and new bonds, Measure 50 exception value, compression, and taxing districts levying lower rates. All right. Now you have seen this taxing matrix a few slides back, but in the previous matrix, the calculation showed compression. In this matrix, it shows how the education and general government categories did not change. If you look down here, when I talk about no change, the rate did not change. Education and general government, no rate change. But still, the taxes went up 5.41%. So you're like, well, if there's no rate change in education and general government, why did my taxes go up more than 3%? So the answer is look a little bit deeper down into the actual tax rates down here where my cursor is at the bottom of the page. And you'll see the bonded debt line item, the rate change went up 33 cents per thousand. And so that increase in bonded debt, in the rate of bonded debt, made the actual taxes for this property go up more than 3%. I know I'll talk about that a lot in this presentation, but I think it's an important concept to understand. All right, now we're going to get into a few slides that have statistics. So if any of you out there are statistic junkies, you're going to have a good time here. This is a slide that shows a lot of data that is interesting to me. If you focus on the 2020 column right here, follow my cursor, and work your way down, you can see the value and tax numbers that Clackamas County has and the changes in the past couple of years. This year, the county's RMV is over $86 billion. The taxable value is over $55 billion, and the taxes imposed are over $962 million. And that's a lot of property taxes for our staff to collect. Another item of note is the accounts in compression row. Right here, I'm highlighting it with my cursor, accounts in compression. You can see the last 2 years, the number of accounts in compression was relatively stagnant. But from 2018 to 2019, there was a big jump. Now, this is unusual because typically in appreciating real estate markets like we have right now, there is a decrease in the amount of compression. But here we see more accounts have compression. So what happened here is that there was a taxing district that approved a local option money measure that created more compression for many accounts. And that's why there's this increase. All right, let's move on to some more fun with statistics. Oops, too far. Here we go. All right, last week, Tammy Little, the assessor, told me that this was her favorite slide. So I feel a little bit of pressure to deliver here. So here we go. This slide goes back 22 years and shows the change in market value and assessed value of all the accounts in Clackamas County. This time period is post measure 50. And you can see the ups and downs in the market value. Right here's the market value column. Right here is the assessed value column. And here's the percent change in respectively. You can see the variance in the real market value. And then in the 2009 period to 2011 during the recession, you know, values on a percentage went down, and then post recession, we had double-digit growth. So again, you can see if the actual property taxes we paid were tied to the real market value year over year, we'd have a lot of fluctuation in the amount of property taxes that we pay. But we pay off the assessed value over here. And although these numbers rise every year, you can see on the right-hand side, the percent change doesn't fluctuate nearly as much as it does over in the market value change section. So again, this is an example of the predictability and consistency that Oregon property taxpayers wanted in the system. All right. This slide shows how values fluctuated and grew over time. All right, this slide focuses on change in tax imposed since 1997. And items of note on this slide down here, minus 2.5%. The amount of taxes imposed in 1997 dropped because this was the first year Measure 50 was instituted. Then up here in 2012, 2010, 11, and 12, the growth rate in taxes dropped significantly due to the recession. And taxes still increased every year. If you look at this, taxes still increased every year, just not at the rate seen in other years. If you follow my cursor, the rate of increase was lower than 3%. And if you go before or after this time period, it was over 3%. And then jumping up to 2019, you see this growth rate of 8.05%. Again, this is due to money measures voted in, which can increase, and it did here, the growth rate in taxes imposed, in addition to the normal 3% growth rate and new construction. All right, let's move on to our last slide with statistics. There'll be other slides. I don't want to disappoint anyone that this is our last slide, just the last one with statistics. So this is an interesting slide that shows the compression loss each year since 2006. Remember, compression loss typically increases when market values are going down and coming closer in line with MAV, and then compression loss typically decreases as real estate appreciates and there's a greater separation between real market value and MAV. Okay, look at the chart to show how this is true, and we can follow the historic numbers. From 2011 through 2013, when market values were generally declining, compression was increasing. You can see here, this is the education loss amount. This is the general government loss amount. And over here in white, this is the total Measure 5 loss due to compression. And you can see 2011 starts increasing and increasing, okay? But then in 2014, when the real estate market was rebounding, compression loss started to decline. And again, the anomaly here is in 2019, when real estate market values were continuing to increase, but the compression loss also increased. And again, this is due to money measures voted in, which increased the tax rate. All right, now we've talked about value and taxes. Let's talk about next, what happens with these tax dollars? Where does it go? So this graphic displays how much out of each dollar collected in property taxes goes to the local services in the county. Okay, starting at the upper left, we have schools K through 12. From each dollar collected in property taxes, 42.99 cents goes to schools K through 12. The county collects 17.79 cents. And then going down to the lower right, miscellaneous collects 1.9 cents. And this miscellaneous category includes things like lighting, roads, vector, and water. So we're going to look at another slide with a dollar bill focusing on this county portion, 17.79 cents. And what this does is it shows which programs in the county get what percent of that 17.79%. So public safety, as you can see, gets 69%, general government 9%, and working your way around the dollar bill, assessment and taxation, our department gets 4.9%. And then I'll note on the far right, this over here is a list of programs in the general government category. Right here, public and government affairs. Today, this was made possible by our friends in public and government affairs to deliver this Zoom to you today. All right, sample tax statement. All right, let's focus. This is a sample tax statement. Let's focus on the right-hand side. Right, underneath the 2020-21 current tax by district. What we have here is a detailed list by taxing district of the property taxes owed. The first three lines comprise of the education category. All right, the next grouping of districts comprises the general government category. Right, and remember, these two categories are subject to Measure 5 tax limitations. The last group has 5 line items, and notice at the end of those line items, it says excluded from limit, right there on my cursor, excluded from limit. These line items are bonds voted in that are not subject to the Measure 5 tax limitations. Okay, any questions? We're moving on to a new topic, our last topic, which is appeals.
Bronson, we have a quick question.
Great.
The question is there a Measure 47 related to property assessment / taxes besides Measure 5 and 50? Could you briefly summarize what this Measure 47 does related to property taxes?
So you broke up a little bit on my end, but what I think I heard is they want us to talk about Measure 47 and how it relates to Measure 5 and Measure 50?
Yes, yeah. The question again is there a Measure 47 related to property assessment and taxes besides Measure 5 and 50?
Okay. I've been talking a lot. I don't want to hog all the screen time, so I'm gonna let Tammy get involved here if she's agreeable, and have her talk about Measure 47.
I'd be happy to. Measure 47 was initially the measure passed by voters, but the legislature was not able to implement that, and so they drafted new language, and when it was fully implemented, that it became Measure 50.
Okay, I think that answers that question. Again, feel free in the chat to ask any more questions, and it looks like in the chat the attendee is good with that answer, so we'll keep going.
Okay, great. Okay, we've got about 5 or 6 more slides left. Now we're going to talk about appeals. So the next 4 slides actually deal with the appeal process. And it's important to note that you are appealing your value. You are not appealing the amount of taxes that you owe. Remember, for most taxpayers, the real market value is higher than the assessed value. So if your appeal results in a value reduction, a real market value reduction, there still may not be any tax reduction if the real market value does not go below the assessed value or result in Measure 5 compression. Now on the slide referring to the last bullet, if you have new construction or another Measure 50 exception event and you think your value is too high, then you need to appeal, because the first year after a Measure 50 exception event is what sets your MAV. And once your MAV is established, then that's where it's going to be. That's where it's going to stay, aside from the 3% growth. All right, the appeal process. So I think this is really valuable information. So I'm going to go through each bullet and let people absorb and take in the information just in case there's questions on this. So bullet 1, call our office and talk to an appraiser, and we can check to ensure our records are accurate. You know, if you think the value is too high, and we can let you know if our records are accurate. We can discover if our records are accurate or inaccurate, or make that determination. And we can also let you know if you may receive a tax decrease based on your requested value, you know, what you think the value is on your property. Bullet 2, appeals are processed through the County Board of Property Tax Appeals, also referred to as BOPTA. This is the official first step. Bullet 3, BOPTA is administered by the county clerk's office. So it's not administered by our office, the Assessment and Taxation Department. It's administered by the county clerk's office. Bullet 4, the appeal paperwork must be filed before the end of this year. So in any given year, it has to be filed before December 31st, 2020. That's when you have to have your appeal paperwork in to the county clerk's office. Bullet 5, BOPTA hears value appeals, not appeals of the tax you have to pay. Bullet 6, any value shown on your tax statement can be appealed. And then the last bullet, the board starts to consider appeals on the first Monday in February, and the process ends by April 15th. Now let's talk about keys to the appeal process. Okay, for bullet 1 and 2 here, remember, the assessment date is always January 1st for every tax assessment year. This is the date we determine value. For your current property tax right now, the assessment date is January 1st, 2020. All right, moving on to the 3rd and 4th bullet point, the appellant has the burden of proof. What this means is the petitioner, which is typically you, the taxpayer, will need to have market evidence that shows support for the claim that the assessor's value is incorrect. Bullet 5, what does preponderance of evidence mean? Well, what it means is the appellant must persuade that it is more likely than not that the facts presented are true. So said another way, you have to persuade the board that you have information that shows the value you're requesting is correct versus what we have on our tax assessment rules. Bullets 6 or 7. Here are a couple common mistakes. 1, trying to compare your property tax to your neighbor's property tax. Remember, you are appealing value, not taxes. Another common mistake is comparing your values to the values in your neighborhood. And you may be wondering, well, if I can't use that information, what am I supposed to use? So let's go over what is information that you can use in the appeal process, or to be successful. This is information that has been used in the past to support value. And this is the last appeal slide. So this is a list of supporting documentation that will help in an appeal. And I'll go through these again. Bullet 1, arm's length transaction. So what that means is a recent sale of of your property, of the property that you're appealing. If you just purchased your property and say you paid $350,000 for, and it's an arm's length transaction, you bought it through a realtor, it was listed for an appropriate amount of marketing time, it had exposure time, you paid $350, maybe there were a couple offers, they took yours, so $350 is a good market value. But we in the assessor's office have it valued at $450. Well, that could be an indicator that we have your property value too high. Bullets 2 and 3, a recent fee appraisal. An appraisal will have a list of 4 or more sales that support a value. These are comparable sales. And that's what bullet 3 is describing, a comparison of sold properties similar to yours. Bullet 4, some sort of proof that we have an error in our records. So for example, if we have your home listed in our records as 2,200 square feet and your house is only 1,800 square feet, bring that information to us. Bullet 5, construction costs. Construction costs can be an indicator of value for new construction, especially. And then the last bullet, income and expense information for income producing properties, such as office buildings, retail centers, and multifamily housing. If you recall at the beginning of this presentation, I let you know that I spent 9 years as a commercial real estate appraiser. And we spent a lot of time analyzing income and expense information in order to determine value on commercial property. All right, on to the next slide. Is there any questions on appeals? Just to reiterate, the paperwork needs to be in, the appeal paperwork needs to be in by December 31st of this year, and you need to turn it into the county clerk. We have physical papers in our office that we can give you, appeal paperwork. You can also get them on the website for the clerk's office. Elaine, if that's incorrect, or if there's more that should be added there where they can get paperwork, please jump in.
Yeah, they can check on our website too. There's the link for the forms.
Okay, good. So on our website, we have a link to the forms if you want to appeal your property. All right, just a couple slides left here. This should go fairly quickly. I'm not going to spend a whole lot of time on these last 2 slides, but here is contact information if you would like to talk to a subject matter expert in farmland deferrals or forest land deferrals. Tony Hunter in our office is a wealth of knowledge, and even if you're thinking about buying a property that you think may qualify for farm deferral or forest deferral, call up Tony and talk to him and tell him what you have, what you're looking at, and he may be able to look to see if that property is under a current deferral or some other information. Also at the bottom of this slide is a snapshot of our website where you can go to obtain more information on these programs, including eligibility requirements.
Bronson,
Yes.
we have a quick question.
Sure.
Has the pandemic had any effect on RMV?
That's a good question. We have calls on that quite a bit. So here is the answer. If you recall, we've talked a lot about the assessment date being January 1st, 2020. That's the date. That's a snapshot in time where we value all the property in the county. So that's a set date per statute. That's the legal assessment date. The pandemic, if there's any change in value due to the pandemic happened post the January 1st, 2020 assessment date. So anything dealing with the pandemic and values would be reflected on next year's tax rolls, not this year's.
And the same would go for wildfires?
So good question on wildfires. Again, I've been talking a lot, so I'm gonna let Lynn get in here and talk about wildfires. She's been very integrated in what's going on there and the different options that people have if your house was damaged or destroyed in the wildfire. Lynn, can you take this one?
Sure, thank you. Excuse me. The wildfires occurred after our assessment date, so we don't change the value on the roll if you had a home that was destroyed or an outbuilding. But what would qualify for this tax year, 2020-21 tax year, is a proration of tax. So if anyone did lose property due to the fires, we ask them to contact our office to see if you qualify for that proration of tax for this tax bill that's due November 15th. Next year, for the January 1st, 2021 assessment date, we will be removing the value of those structures that were destroyed from the tax roll, and even partially damaged, if that was the case.
Okay, thank you, Lynn.
Great, thank you.
Any follow-up questions on that, Scott? Okay,
Nope, that's
good.
it.
Moving on to the last slide here. So this includes contact information for Susan Brookshire. She is our expert on the Senior and Disabled Deferral Program and for veterans and active duty military exemption programs. And speaking of veterans, tomorrow is Veterans Day. I'm a veteran. I served 4 years in the Army, and I want to say thank you to all the veterans and current military personnel out there for your service. I appreciate what you have done and what you are currently doing for our country. So that concludes all the slides. If we have any general questions, we can field those at this time.
Great. So as Bronson said, we'll take some questions. If you have a question, you can utilize the raise hand button on the Zoom bar. That's at the top or bottom, depending on your device. Or if you're joining us on the phone, you can hit *9 to indicate you have a question. I also want to repeat that if you found that you do want to talk to one of our appraisers after today's town hall regarding a specific property tax question, you can always call our main office line at 503-655-8671 or send an email to propertytaxinfo@clackamas.us.
Hey, Scott, there was a question when someone registered about methods of payment and online payments. Could maybe Tammy address that real quick?
Sure, we have online payments available. You can use your credit card or a debit card. It's our vendor is US Bank. They do charge a fee, and the taxpayer is required to pay the fee if they want to use that option. It's one of many options that we have. Another typical option is to drop it in the US, put it through the US Postal Service, excuse me. You want to make sure that you have that postmarked on or before November 16th. We are also open to the public, accepting tax payments Monday through Thursday from 9 a.m. to 3 p.m. And we also have 2 drop boxes located at our building, one by the main entrance and one in the parking lot that you can drive through. If you go to our website, all of these payment options, if you pay in full by November 16th, you'll receive a 3% discount. If you pay 2/3, you receive a 2% discount, and or you can pay in 3 equal installments in November, February, and May, 1/3 each. It avoids interest, but it also does not allow for discount. So all of that information is available online, or if you call the number that Scott put in the chat, we'd be happy to help you with your specific question.
Yes. Does anybody else have any questions?
I did put some more specific information, Scott, about the Measure 47 question in the chat box, so just to make sure everybody saw that.
Okay. I don't see anybody raising their hand or having any questions. So I think with that, we'd like to wrap up today's town hall. I want to thank all of our guests here today and everyone who joined us, all the attendees. Thank you for taking time out of your day. Again, if you have any questions or would like to speak to an appraiser, please call our main office line at 503-655-8671 or send an email to propertytaxinfo clackamas.us. And again, I want to thank you and everyone here today. Have a great day. Thank you.
Thank you.
Thank you.
Thanks, everyone. Thanks for coming.